Okay, folks, I've just recorded my video on Bitcoin, and as we're speaking, it's just started to rally a little bit. So I decided to have a look at the fib extension for Bitcoin on the hourly chart. From the low on the 8th of September, which is 9827, up to this high point here that we had when we rallied back up, back down to the low of 10122 that we had on the 23rd of September at 7 o'clock. We've rallied up. We used the 382 for support in this fib extension. And now we're up and we're trying to break through the zero point 0.5. It's relevant because we've bashed against it a few times. Now, I think if Bitcoin gets above this, you could look to the 618, the golden ratio at 10,948 as being the next target for Bitcoin. And Bitcoin runs the market, really. Bitcoin is the one that drives the market forward. And we look at other cryptos against Bitcoin to see, if it's better to be in them. But if Bitcoin really puts on a big rally, you could have a few days where the other cryptos are going sideways. But soon enough, money will flow out of Bitcoin, which is big money. To move Bitcoin 4%, you're talking about not hundreds of billions, tens of billions of dollars to move Bitcoin 4 to 6%. Whereas, that 4 to 6%, if that money was in a smaller cap, like even Chainlink, which is number 5 or 6 at the moment, Chainlink's going to go up 30%, 40%, more than that, and that is big gains and big losses. So when Bitcoin really puts in a big oomph, a big rally, if we go up to, 11,100 in the next couple of days, you will see a movement in the market. Now, obviously, there's a lot to look at when Bitcoin gets to this 11, this sort of level. Whether it's going to carry on, whether the rally's got legitimacy, there's still a lot to look at. But like I say, Bitcoin drives this market. I was talking about the stock market, is interesting stuff. I went on to talk about Joe Biden. So I want to just talk a little bit about this American presidency. I'm not going to state my allegiance to any side of this presidential debate. We've got a report here that Joe Biden's plan would create 7 million more jobs than Trump, according to an economic forecast. So it's Moody's, which is pretty respected forecasters. They're indicating that Biden presidency would create 7 million more jobs compared to a second Trump term. A stronger economy, higher incomes for the middle class. Household incomes would rise nearly 5,000% under Biden, but stay unchanged if Trump is re-elected to another term. How is he going to do that? The study concluded it was conducted by Mark Zandi and Bernard Yaros, evaluating the economy's trajectory under 4 different scenarios, but it found that a Democratic sweep, where Biden is elected and Democrats recapture the Senate, would lead to a significant increase in federal spending. They assume it would be a largely deficit-financed, meaning the government racks up a bigger federal debt, but you've got to counteract that against a rising economy. More jobs, which will in the long run do the books good. The deficit finance, if it's deficit financed, eventually that will correct itself. The spending, though, wouldn't be a drag on overall growth. Instead, 18.6 million jobs would be created during Biden's first term and lift the average American's household after-tax income by $4,800. That's 7 million more jobs compared to a scenario where Trump is re-elected and Republicans hold on to the Senate. Household incomes largely stay the same should the GOP control both legislative and executive branches. So there's a chart there, jobs under different election scenarios. As you can see, the Republican is the red line there. and it's slightly below the current policy, which is obviously Republican, and the baseline is above that. But this Democratic sweep is indicating a huge increase in non-farm employment. The Moody analysis tells us that the Biden plan would result in more jobs, stronger economy, and higher incomes for the middle class, said Michael Linden, a fellow at the left-leaning Roosevelt Institute. He told that to Business Insider. The unemployment rate would drop below 4% in late 2022 in a Biden presidency. Under Trump, that would occur in the first half of 2024, a 1.5-year difference. The analysis sought to predict the economy's trajectory under several different scenarios, including a period of divided government. Details around Trump's economic plan are scarce, though he has pledged another round of middle-class tax cuts without elaborating among other measures to aid wealthy investors. Linden said, increasing federal spending helps prop up the economy during a recession. Every dollar of additional government spending in the next couple of years is going to produce more than $1 worth of new growth and more economic activity, which creates more jobs, Linden said. The bang for your buck is massive. He added that Biden's endorsement of policies such as paid family leave and stronger access to childcare also shores up the number of jobs created in the analysis. Biden has unveiled an ambitious suite of spending proposals that would generate $4 trillion in new revenue over 10 years. He recently incorporated an overhaul of the child tax credit into his economic platform, which would allow parents with children under 17 years old to receive up to $300 in monthly federal payments next year. So interesting stuff going on in the presidential election. Bitcoin has picked up a bid. It's the close of the markets, the open of the new week. Bitcoin has picked up a bid just now as we speak, and we've broken that fib 50 there, that on the extension that I just showed you. Let's go over to the Bitcoin. This is interesting that it's done this, Bitcoin. Let's go over to the fib retracement and have a look at that. It's not often I'm live and something like this happens, to be honest. This was the overall high in August and down to that low, and Bitcoin has broken the 382 here, which is another big moment for Bitcoin. It's interesting. I wonder if any of the other charts are corresponding. Let's have a look on the daily. How does it look on the daily? Yeah, it's that 382. So it's the same bit. You know, if we close above the daily, we've also got above that 20-day moving average, which is at 10,733, and we closed above it. So we closed, I think that's the signal that's gone off. Closing above that 20-day 6 minutes ago, that's put a pump onto Bitcoin. Let's see if it's corresponding to Ethereum. So Ethereum, let's go back to the hourly on Ethereum. Ethereum is also, let's get rid of that because that's irrelevant on a 1 hour chart. Yeah, Ethereum's also picking up a bid in the last couple of hours, and to close above that line is big news. Let's see about getting a Fibonacci onto this. We could have a look at ETH highs as well. Yeah, the fib retrace for the ETH highs. Yeah, it's bounced nicely off the fib 50 there and gone on. So the next target in ETH is 363. How are we doing in Chainlink? Chainlink's not really picked up. So Bitcoin's the one that's really picked up here. Is Litecoin doing anything against Bitcoin, or is Bitcoin? Yeah, Bitcoin's dominating against Litecoin in that last hour. So it looks like it's Bitcoin that's doing the work here. We'll have a look at Ethereum Bitcoin, which would be relevant, seeing I just looked at Ethereum. Let's see. Ethereum did pick up a little bit, but as it picked up to Bitcoin, that's the one I want to see. No, it hasn't really. The Bitcoin is going by itself at the moment. That's an interesting thing. Let's have a quick fib on this. From that low to that high. Yeah, it's above the 23,236 there. So it's in Bitcoin that we're watching. And it's picked up above that 386. So let's see what happens. I wanted to talk about John Bogle. Now he was the chief executive of Vanguard, and he's in a book that I'm reading. That one of my friends has got into this book. It's the who's who of investing, and New Book of Investing Rules. It's called, by Christopher Parker, and it's the Harriman's. It's like a Bible, and it's a who's who of investing. You have John Bogle in there. Vanguard is the world's largest mutual fund organisation, comprising of over 370 mutual funds with current assets totaling more than 4 trillion. So that's pretty big. In 1999, he was named to Fortune magazine as one of the investment industry's 4 giants of the 20th century. He was named one of the world's 100 most powerful and influential people by Time magazine, which is also a lot about culture. And you have music people in there. So John Bogle is a big man in the investment game. And some of his sentiments are quite interesting. John says, there's no escaping risk. Once you decide to put your money to work to build long-term wealth, you have to decide not whether to take risk, but what kind of risk you wish to take. Do what you will, capital is at hazard, just as the prudent man rule assures us. Let's have a look. So you can see me now. Good evening to everyone. Yeah, so money in a savings account is dollar safe, but those safe dollars are apt to be substantially eroded by inflation, a risk that almost guarantees that you will fail to reach your capital accumulation goals. Wow, this is very interesting. And yes, money in the stock market is very risky over the short term, but if it's well diversified, should provide remarkable growth with a high degree of consistency over the long term. See, this is what I'm really trying to talk about all the time in all my posts and my videos, etc. Buy right and hold tight, John Bogle says. He says the most critical decision you face is getting the proper allocation of your assets into your investment portfolio, stocks for growth of capital and growth of income, bonds for conservation of capital and current income. Once you get your balance right, then just hold tight. No matter how high greedy stock market flies, nor how low a frightened market plunges, change the allocation only as your investment profile changes. Begin by considering a 50-50 stock bond balance. Well, I'm a crypto man, so 25% of that, well, no, I'd say 50%. So I'd go 50% crypto and 50% stock bond. That's not financial advice, by the way. Okay. That you raise the stock allocation if you wish. So in my situation, it's raised the crypto and the Bitcoin allocation. You have many years remaining to accumulate wealth. The amount of capital you have at stake is modest, i.e. your first investment in a corporate savings plan. You have little need for current income. You have the courage to ride out the booms and busts with reasonable equanimity. All these factors are reversed. Reduce your stock allocation accordingly. Sorry, it says as these factors are reversed. This is very interesting. I'm going to finish this video just with a note that I met Andrew Craig on Friday, spent the day with him, and he gave me this book. He's pleased as punch that he got into this book. He's at page 185 in this book. This book is a really wonderful book. I recommend it to anyone that's got any interest in putting any money into stocks and shares. And as I've just said to you, keeping your money out of cash and taking a risk is how you become truly wealthy. You're not going to get wealthy in property, because property, you pay an interest unless you're paying for it outright. The administrative things that go on with property, unless you're buying a property estate abroad somewhere, a property developing in a foreign country, but in the Western world, in America or the UK, the property days have had their heyday. You need to diversify into precious metals, into commodities, into stocks, into equities, and into bonds, into crypto, and just have a big product list of products, and you are highly likely that you're going to gain on a large proportion of these investments. It's simple. It's happened for the last 50 years. People think it's risky because the mainstream media news go crazy when the market goes down. Well, the market only goes down a little bit. In the year 2000, okay, the gross domestic product in the world, so that's all the world's economy, was 32 trillion. In 2019, this was 90 trillion, an increase of 180%. Now, if you were invested in things there, that is some return. Okay, and in that time, we've had terrorism threats, we've had a war in Iraq, which was a big deal at the time. We've had an economic crash in 2008. We've had threats of, we didn't have this pandemic then, but since the pandemic, that 90 has gone up a lot since last year. We increased throughout 2019. I don't think we hit the 100 trillion mark, but this COVID crisis will die off and that growth will continue abound. You can be assured of that. So I wish you good night. I hope you enjoyed my videos.